Hello and welcome to a very special Cardio Live sponsored by CG Professionals. Now today I have not one but two of the most prominent leaders in the motor trade taking our questions. It's a pairing that I've wanted to set up for many months, so thank you very much to our two guests for agreeing to appear today. Welcome to Robert Forrester, CEO of Vertu Motors, and Daksh Gupta, CEO of Marshall Motor Group. Hello to you both.
Hello, James. Good afternoon.
I thought when you said two prominent leaders in the motor trade, James, I thought you meant yourself, James, and Robert. Clearly,
don't start, Dash. Right, a quick.
Someone described me. Someone described James to me today as the Piers Morgan of the motor trade.
Oh God, that's really bad.
Actually, Robert, we could have a bit of fun. Why don't we interview James? Actually, this could.
Oh no, I've been ganged up on already. Right, anyway. Let me just a little quick introduction for you both. You totally thrown me off.
We haven't finished yet. We're just starting, James. Don't you worry about it.
Brilliant. Well, where's the mute button? Okay, so Dash is the CEO of Marshall Motor Group. He's Marshall Motor Group's the fifth most profitable dealer group in the UK. They finished fifth in the car dealer top 100 with EBITDA of £43 million for 2019. At the last count, the dealer group had 113 dealerships and represented 22 manufacturers, including brands like Audi, BMW, Ford, Land Rover, and Mercedes. And over on Robert's side, Vertu Motors is the sixth most profitable dealer group, according to our list, with EBITDA of 40.7 million in 2019. Vertu has 147 sales and after-sales outlets across the UK, operating under the Bristol Street, Farnell and Macklin Motor brands, and it represents 32 manufacturers, including the likes of Audi, Mazda, Nissan, Vauxhall, Volkswagen and Volvo. Now, this is a live show, so if you've got any questions and you want to ask them, please feel free to submit them via YouTube. But I've got many, if I can control these two. Firstly, Dash, let me...
Well, can I just say, James, I sold my Volvo dealership to Dash, so we haven't got Volvo.
At probably the right time, but we'll come on to that. Dash, let's start with you. We've just seen the Chancellor make his announcement in the Commons. He's still talking at the moment. He's extended furlough again to the end of September. There's been some more grants for non-essential retail, and importantly, the business rates holiday is going to continue at 100% to the end of June, and then 2/3 after that for the fiscal year, we believe. Now, businesses in the motor trade have really benefited from this help from the government, haven't they? What's your immediate reaction to that extension of the furlough scheme? And can I just ask you on that point? You talked just before the end of the year last year that you weren't going to use furlough again. Did you have to turn back to furlough in 2021?
Yeah, I mean, we went into 2021 with an absolute intention of not to use the furlough scheme. I think from our perspective, though, when you look at what was happening in that sort of second week of January, the numbers were pretty horrific. And I think, one of the things I said internally to our team is I don't really think we properly experienced COVID-19 in the first or second lockdown. If you think lockdown one, we didn't have many cases within our business, same within the second lockdown. But certainly if I looked at the lockdown 3 for us, and we had on the 20th of January, so only 20 days in, we had around 470 colleagues impacted. So it's quite a significant number for us. And we lost around 1,850 days just in the first 20 days. So it was not something we wanted to do. But obviously, with all of these things, I think what we stated in our stock exchange announcement in December was that was our current intention. But of course, we put that on the 9th of December. I don't think any of us expected at that stage to be seeing the numbers that we were. So yes, we are using furlough. I think in terms of the response to the Chancellor's announcements today, I think there's no doubt, we'll all be putting out our results. I mean, Robert put a pre-close out this week, indicating where he's going to be for last year. We've done a similar thing last year as well. As you know, we indicated that we'd be delivering a profit of at least £19 million. We'll announce those on Tuesday. But I think we've also got to all keep our feet very firmly to the ground. If we didn't have that very significant support on business rates, on furlough, and also benefiting from the tailwinds that were quite unique because of the drop in the first lockdown, we would have all been posting very, very, very significant losses. So, I'm a bit mixed really about last year because yes, the industry's bounced back well, but we also have to realize this wasn't a real result, so to speak. And moving forward in terms of the actions, I think the Chancellor's taking a responsible approach in terms of trying to, wean us off furlough, so to speak. I haven't had a chance to look at the full details yet, James, but as I understand it, the furlough scheme goes through till September. From a personal perspective, we want to try and get our people back as quickly as possible and get back to normality and not rely on that support. That's where we are. And I think the rates thing is also positive. But again, I think he's been sensible by sort of graduating that into the rest of the year.
Robert, in your announcement this week, £8.2 million worth of support from the furlough scheme and business rates relief. It makes a big difference to the numbers, doesn't it? Have you thought at all about paying any of that money back?
No.
Why?
Because the government closed me down.
Because the business has still managed to operate, hasn't it, in some way, shape, or form?
Yeah, it has. But I mean, it didn't operate in lockdown one to any great sense. I mean, we kept service departments open for key workers. We obviously did some degree of sales, but it was pretty minor and pretty low level. And I think if the government, and I'm not a big fan of government spending, we'll come on to this latest budget, but the bottom line is they closed us down and we have a high fixed cost base. And I think operators who have made a profit in 2020 in the motor retail business have done well. There are some players who have not made a profit. And I don't feel I don't think it would be right to pay that furlough money back. I think we've got to be very judicious if we use the scheme after this lockdown comes to an end. Let's hope this is the last lockdown. Our view will be we've got pretty well everybody back now, apart from people who are shielding. And I really don't want to be using that scheme. I want people back and I want them productive. And I think we'll be busy anyway. So I suspect that will be absolutely fine. But the scheme was put there to protect businesses. It's done its job. And I don't think it would be either in the employees or the shareholders' interests to start talking about paying that back.
And what about when you are open fully from April the 12th? I mean, these business rates holidays look like they're going to continue. I mean, I know that's an announcement that's just come out, but what's your immediate thoughts on that?
Yeah, I mean, he's got a difficult job, hasn't he? Because the high streets are absolutely shambolic at the moment. They're obviously closed. You've got the food retailers who are doing very, very well. And I guess motor retail is a bit in the middle. I mean, again, they have closed us down in our busiest month of the year. Customers can't go into our showrooms. So that support's there. And I very much intend that we will no doubt be taking that support. I think we've then got to be very careful about how we utilise that. And I know that we'll have to look at it carefully. But I think it's there to protect British business. And I don't think there's anything wrong in that necessarily. I think he's got a big job on to actually pay it all back. That's a different question.
Dash, what are your thoughts on that government support that your business has received, and have in your boardroom, has there been any talk about possibly paying any of that back, or how are you going to use it going forward?
I think one thing I'd say is if I look at 2020, I mean, picking up Robert's point, which I also agree with, which is around, many operators have posted losses and are still going to post significant losses for 2020. I think, Robert's given some guidance this week. I gave guidance, as I said, in December, and we'll announce on Tuesday. But you've got a combination of three things. If you've done well in 2020, you've got three things. You've got sector tailwinds, which were unique because of that drop. You've got a significant amount of government support. So, and we absolutely acknowledge those two things, and to an extent, we didn't control the sector tailwinds from the first lockdown. We didn't control government support. But the one thing that I think, we can look at ourselves and give a little bit of credit to ourselves, and I don't want to take anything away from my teams, is we did outperform the market. And we've indicated we've outperformed the market. And that outperformance has probably driven a significant amount of our profitability. So you've got to put a balanced view on all of these things. So I think the other thing in terms of, government support, I think we have considered that. I think we've done what I think are the right things at the appropriate time. So, for example, we as a company did take advantage of the VAT deferral scheme, which was announced at the start of the pandemic. At that stage, none of us knew what we were going to be dealing with, what cash was going to look like. So we took advantage of that. And as soon as we came through, we saw the benefit of the bounce back. and for us it was £10.9 million. We took a decision as a board to pay that back in September. So we paid that £11 million back 18 months early. So these are conversations we look at, and it's about taking a responsible approach to being a good corporate citizen as well.
Dash, let's look forward.
The good news is, James, that I think we've said we hope to be in line with analyst forecasts of 23 million. Dash is at 19 million, and we'll be paying tax. We do pay our fair share of tax, so it ends up certainly a proportion of it back to where it started anyway in terms of the treasury.
I mean, it's important that we get dealerships open, isn't it? And I know you're both desperate to see showrooms open on April the 12th. Dash, I'm loving your countdown on social media every morning. It's quite entertaining to see what picture you pick. Let's start and have a little look at.
On that, James, if anybody has some future countdowns, because people are now actually sending them in to me, I'll pick the best ones.
Okay, we'll make sure we keep an eye out for that. It's probably going to get quite difficult over the next coming weeks. But let's start with what you think the pent-up demand is going to look like. We've reported today from a number of different experts. What Car, Auto Trader are saying that their views are currently up on their website as consumers are looking for more cars ahead of showrooms opening. Do you buy into that, Dash? Do you think that there is going to be some level of demand when you are allowed to open again?
Yeah, absolutely. There has to be. If you think about it mathematically, the bounce that we saw post the first lockdown was huge. But then again, if you have your showroom shut in the busiest week of the busiest month in March, and you have 97% sales down in April and 89% down in May, our customer base are invariably in event-driven finance agreements, i.e. PCPs. So we know over 80% of our new car customers are in PCP. They typically change around that time. So they will be coming back into the marketplace. Unfortunately, they couldn't have that benefit. We did see the unique tailwinds of supply shortages because factories were closed. That put a positive pressure also then into the used car market. And all of that sort of resulted in this huge sort of tailwind that the industry benefited from. Now, if you think about this lockdown, though, we're sat in a situation where January was down 39.5%. I believe February is going to be down somewhere around 35%. Wait for the final numbers to come out. But depends on what happens in March. But let's say that 30% trend carries through. The reality is it's not 97 and it's not 89%. So you will get some sort of bounce back. Is it going to be anything like we saw in in particular sort of June? And in Q3, no, it's not. But you have to mathematically say, yes, there is going to be some sort of bounce back for sure.
Robert, what are your thoughts on how busy do you think dealerships could be?
I think they'll be busy. I think Dash makes a very good point. Lockdown 1 was a 90% drop in activity. So the bounce back clearly you would argue would be bigger after lockdown 1 than this lockdown. However, it's gone on a long time, this lockdown. And it incorporates Q1. So anybody looking to change brand or change powertrain are really waiting for a test drive. So I actually think that'll power the pent-up demand. And the other thing I think difference between lockdown 1 and this lockdown is a lot of people have saved a lot of cash. They're working from home, they've earned well, they've got strong cash balances, and they're desperate to spend it. And I know we had a bit of that last time, but I think it's probably here in spades. And the market 3 years ago was very strong, so PCP renewals will be quite strong. So I'm pretty optimistic actually about new and used demand post April the 12th, and we will certainly be gearing up for a riotously royal time.
Let's hope so. Robert, you've both made it abundantly clear that you're looking to grow your respective businesses. You mentioned it in your update and targeting some ambitious growth. You said this week you've got a strong pipeline of acquisitions. Just how big can Vertu get?
Well, it's an interesting question. A CEO of a listed entity in our sector a couple of years ago said to me there could be a 10 billion turnover group. And actually, I don't think there ever will be, because I think agency will mean that turnover is measured differently. So I'm not overly convinced that will ever happen, actually. But if you take the concept, and I sat there thinking, I can't see it really myself. But actually, the way the market is moving, the way the investment required in digital is moving, the growth of brands, and Dash talks talks about this, and I think we're probably very similar in our views about where we are heading. I think we are heading for more consolidation, for the growth of very large groups who have big brands, who are very professional, who utilize technology to the nth degree, both internally and in terms of customer journey and transactions. And I think it will be done in coordination with the manufacturers, who will be wanting to reduce distribution costs and be wanting to have very professional operators. So I think the strategic rationale for growth is there. Whether Vertu is one of those big players, we'll have to wait and see. I'd hope it certainly is. Will there be a time when we have two very large groups, one called Vertu and one called Marshalls? We'll have to wait and see.
What do you say then, Dash? How big would you like to see Marshalls get?
I've always been consistent on this, James. I'm not really bothered about 4 billion, 5 billion, 6 billion. It's academic. I just want to build a great business. So I'm focused on, have we got the right culture? Do we deliver great returns? What's our relationship like with our customers, with our brand partners? That's what's more important to me. Of course, scale is critical, and it's going to be increasingly more critical as we move forward. So I think I would also concur with Robert's views that. There will be further consolidation. That's something I've consistently said. When we've.
Well, there's one thing for sure, Josh. Having incompetent big groups isn't a great idea. Take your point. You've got to have. Are you
saying we're incompetent?
Well, proof will out in the end, Josh. The bottom line is, it's no good having a lot of scale if you can't run it. You've got to have great colleague satisfaction. You've got to have great customer satisfaction. You've got to have strong systems, or you'll just collapse. So I think that is absolutely right. Dash's point is right. You've got to build on strong foundations. I think it's pointless.
I think the other thing I'd say it's quite interesting when you look at the way Robert's built his business, and the way I've built the business at Marshall as well over the last 13 years. We haven't kind of gone big bangs. Now I know you could argue we probably went big bang with Ridgeway, but actually we've had year in, year out. And I think, in many ways, I always kind of feel I've kind of, I'll sort of say, no one sends you to CEO school to be CEO for a £3 billion business. You kind of just get dumped into it a little bit, really. And I think in many ways, I feel certainly that I've been really fortunate enough that I've been able to grow and adapt my business. And as we've done, acquisitions year in, year out, that's really helped us evolve, improve our people, improve our systems, improve our processes, focus more on our internal development and all the things that Robert's been talking about that are incredibly important to being successful.
No, we've had luck, haven't we, Dash, in many ways, because we've worked for some very good people in the past in our more junior days, and we've learned a lot from them. I think you've got mentors that have developed you and put a lot of effort to you, and I've had similar, and I think that is, learning from others, I think, is very important, actually.
So how about I play Cilla Black and match you two together? Robert, could you work with Dash?
Absolutely not.
Dash, what about yourself?
I could absolutely work with Robert. Robert would make a great CFO, It'd be fantastic.
I don't think this date is going well. So, Dash, let me ask you a question. What do you admire about Robert's business?
Oh, listen, Robert's done an amazing job. I mean, a credit to him. I mean, we've known each other. It's quite funny. I think a lot of people think, albeit Robert thinks we're competitors. I absolutely don't think we're competitors. I think because both businesses have had a very similar trajectory over the last sort of, 12, 13, 14 years. It's understandable why people would think that. But, I've got a huge amount of respect for Robert personally, for Andy Goss, the team there. They've done an amazing job, and credit to them. And I've watched how Robert's built that business and doing all the right things. I really admire some of the stuff he's done on things like the technology piece, which I think he's doing a fantastic job on. No, credit where credit's due. He's built an amazing job. And, I think it's one of the, true leaders of the sector. So credit to him. And
if you were running Robert's business, what would you do differently?
Good question.
That is a horrible question.
Can I have that question?
Differently? You can have that one too.
Oh, that's nasty. That is really nasty. Oh, what would I do? Why doesn't Robert go answer first?
Well, if I was Dash being asked that question, I would say, why on earth does he have 4 different brands? Marshalls doesn't have 4 different brands and gets one big website, whereas we operate 4 different brands. So I think that would be one point of discussion, I suspect.
Well, that would be list of questions. That so.
Yeah. Okay. So let me answer the question. I think I would probably say my questions would be: why do you have 32 brands? I only have 17 car brands. So for me, I'd rather have less is more, but be really, really good with those key partners, but have scale and depth. So, our 17 brands cover 78% of the market. So I think scale is going to be important, not only for us, but with those brands, but also for those brands as well. So if the average brand there has a 1% market share, are they going to survive in the long run? Are they going to have the financial ability to invest? So that would be one question. Why 32 brands? I think the brand point is a question I would probably ask. I think also maybe, it's a conversation that Robert and I previously ran, why buy certain businesses in terms of franchises, but also size, particularly of markets as well.
Robert, same questions to you. Firstly, and what do you admire about Dash's business?
Well, me and Dash speak. I mean, probably people don't know this, but we do speak quite often, don't we, Dash? Actually, and the thing about Dash's business is it's run by an operator, and with the best will in the world, I could not be described as an operator. And I think that different sort of mindset does mean that businesses are actually a little bit different. But I actually think he is the number one operator of scaled group, probably. And his background, you can't really fault it, Inchcape and etc. I think it's very strong, and that comes through in the business. I think it's a very well-run operational business. In our business, a bit different because I employ a lot of very good operational people, and we run it as a bit of a collective, actually, because I haven't necessarily got that skill set of operations. And actually, if you look what he's done, he's taken I'm going to say unprofitable. Dash will tell me. Was it unprofitable, Dash, when you took it over?
5 years, didn't make a profit.
Yeah. So an unprofitable regional group with a nice reputation, in fairness, for customers, I think, and has transformed it into a major UK national player in England, actually, with a heavy bias in the southeast where a lot of the money is. So I think, there's a lot of positives there. And it's not actually an extreme example of this, but to answer the 32 brands point, I quite like thinking about these franchises as a portfolio risk. I actually quite like having a lot of franchises because you don't know who's coming up and who's coming down. So we spread our risk more. And then there's the old, do you want to have purely premium with its high investment cost, low return on capital employed versus a more volume premium mix? I think is a debate that I'm comfortable with our position on. And Dash will take a different view, I suspect. But we have actually a lot of fun sparring with each other, I think. And the two very different in some ways, but there's a lot of commonality between the two businesses.
And the same question.
I do enjoy Dash's videos. I always get Dash's internal comms videos. They're always a good watch.
Well, you got a mole.
Spy, I would say.
What would you do differently, Robert, if you were running Dash's business?
Oh well, I would apply the same. I would probably, and it's a difficult one actually because it hasn't got scale in volume, whereas we've got scale in volume. But I would always split the brands between volume and premium. I think Pendragon got that right. Actually, I think your marketing strategies, the way to the customers are different, and I would always split that. I don't think I'd would if I ran Marshalls because actually there isn't that much volume in it, so I don't know whether you'd really be able to do much with it. But certainly I wouldn't want to put our premium businesses under the same brand as our volume businesses.
Robert, you've had some great success with online sales in the last year. What are your thoughts on those ever overtaking physical?
Well, have we? I mean,
from what I've read,
people keep telling me this. I mean, right, here we go. Radio for you and yours all over again. So, a week last Saturday, we sold 540 cars with the showrooms closed. 10 of them were online, pure online.
And so what was the rest on the phone or?
Omni-channel.
Yeah.
So use of the internet leads, phone inquiries, use of video chat, sending personalized videos, a plethora of things. But I mean, we have to define as an industry what on earth online is. This idea that, it's all online. Well, pure online isn't really that big, is it? And we'll have done, I think I was told this morning, we did 130 purely online, no human involvement, 2:00 in the morning while drunk, sales. And we did 6,500 used cars in February.
So when you see, when you look at those figures and you see the likes of Kazoo and a rumoured £5 billion flotation, what do you think to a business that's based purely online?
Oh, I think it's absolutely fantastic, isn't it? As a creation of value, as a means of getting interest in used cars, which it certainly has focused people's minds on used cars. Isn't it brilliant that capitalists will put that much money into a business that sells that few cars?
So why isn't your business worth as much?
Because we don't package it up as an online business. And, there's an interesting one. I mean, Dash will have a perspective on this. If you go back some years, can't quite remember how many years, Pendragon under Trevor Finn had a strategy of packaging the business up as online. Do you remember this, Dash?
Yeah, I do remember, yeah.
Yeah, evanselshaw.com, then we bit about car stores and Quicks and all kinds of things. And it's about perception, isn't it, as much as anything? And I think there is a job, and I think me and Dash can probably be criticised in equal measure for we are, very focused. We got online, we got omni-channel, it's brilliant. We've got 35 software developers and robotics. But actually the perception is we are a traditional old-fashioned bricks business. Not actually true. I suspect we sold more cars purely online in February than the vast, vast majority of operators. Wouldn't know for sure, but I'd be pretty confident that we would. And certainly to sell 6,500 used cars when the showrooms are shut implies some degree of technology somewhere, doesn't it? But when the investors in the Kazoo model are not the same investors as invest in Marshalls and Vertu. They are different, actually. And in my view, if he gets that away, that will be a phenomenal thing.
Dash, do you think Kazoo is worth £5 billion?
Me, I'm a little bit old school. I think free cash flows has to count for something. And I look at valuations. For me, listen, we welcome competition and we wish those guys all the very, very best. There's plenty market for all of us. I don't really want to sit here and talk about Kazoo. It's not really my place to. The fact is there's a market that's going to be over 10 million units, in a normalized year, maybe 11 million euro to sterling. Sterling's getting stronger. It's now hitting 116. That will give our brand partners a competitive advantage in terms of pricing. Last time that happened, we saw how strong new car sales activity was, which was, some people didn't like that because they talked about forced market, but actually volume and sales is good for our business. It really is. We get a bigger slice of database for after sales, which is our high margin in the business. So for me, I think I just want to focus on what we do. I think picking up one of the points that Robert said around, could we do a better job of talking about the things that we do? And it's really interesting. We announced our results on Tuesday, and I will be doing exactly that. In fact, I can't share it, but I do actually have a slide here, which I happen to have on my desk, which I'll be talking about specifically around the acceleration of physical to digital. I don't want to go through it, but what I'm going to talk about specifically is the things that we have done, and I know Robert's done as well in his business, as a lot of the big operators have done, to further enhance their digital offering. So be that reserve online £99 deposit, be that 14-day money back guarantee, be that nationwide delivery.
And that's my presentation, Dash. What do you mean? That's your presentation.
Robert, we'll find out who delivers it first. We'll find out who delivers. That's fine. There, you missed it. Okay, so mine's already done. So So you'll see it. It's slide, Robert. It's slide 21. Just so you know, you'll pick it up 21, 22, 23, 24, 25. So you'll see that on Tuesday. But we have further moved away from physical selling to online. So we are coming from there to there. And I think the reality is, some of these new entrants who originally did come in and say we're going to be online only have had to move more to physical. So I think there'll be a combination of the two. And I think one of the things that I will be talking about is the fact that we are in a strong position because we already have an existing and well-established infrastructure. So in our case, and I know in Robert's case, for us, we have 113 retail centres which can do handovers, which can do test drives, which can do demonstrations, which can sell used cars. They have access to new cars. They have access to customer retention. They have access to manufacturer-led PCP offerings, which are often subvented.
I think that's important, Dash, the point you make about network, because the more and more evidence I see is that people are buying more local, not less local.
Yep.
Which is not what people think when they think internet, but actually they want to see Marshalls with its big dealership local with its after sales, so you can sort out the problems if there's a problem. So I think we're in a great position. I'm looking forward to reading your presentation.
Yeah, if you like, I'll send the PowerPoint. You can cut and paste yours in. But actually, we do undersell ourselves, and I think one of the things. I mean, I'm not one for spin. I don't buy all of that, but I think sometimes it's easy to sort of spin stuff out there, and maybe, as Robert says, maybe we don't do enough of that. But for me, I think cash flows has to count for something. And having a physical infrastructure I see as a real strength on that journey. So I'm very happy with how we're placed.
Dash, last question on this topic, and it's a question that came in from a reader ahead of this, and it's not Peter Waddell. Would you rather have Kazoo or Karzan?
Neither. Seriously, neither. I mean, why would I need to do that when I can do it with my own business and not have to buy and invest shareholders' money to do that? I think I'm in a strong position myself.
Robert, same question to you. Would you want either of those businesses?
I bet Robert. If somebody offered me,
Robert would want his shareholding in Kazoo, though. I'll put my hand up.
Would I want 400 million quid to spend on marketing in the next 5 years to build up my brand? I probably would. Actually, I think that would be not unhelpful.
Let me touch on that branding topic, Robert, which you mentioned earlier. You do have a number of different brands to push, and as the listed dealer groups like yourselves are having to push further and further their own brands in front of consumers. I mean, Dash with Marshalls is advertising on the TV and in front of the football. Does that make your job a little bit more difficult, having to push all those?
No, it makes it a lot. It makes it a damn sight easier, actually. I'll give you an example. We've got Bristol Street Motors in England. I've got Macklin Motors in Scotland. And everybody goes, why on earth? You've got two volume brands. Well, this year, it's been the best thing that's ever happened because Scotland has reopened at different times. I've actually realised, and I should have realised, that school holidays are a different time in Scotland to England. So actually, when I want to run a 0% event, I want to run it in Scotland at a different time than England. I don't want to run it in the middle of school holidays. That'd be bonkers. So actually, we've really worked that well from a marketing standpoint of fitting the local brand. Well, there's all kind of regions around Scottish nationalism, etc. Obviously, I think that came into it. That's why we had a different brand actually in Scotland, because I think we needed a Scottish brand. And then the volume premium thing's just very different. The marketing is very different, and I wouldn't want to run with one brand. It doesn't make live math any harder. It makes it a lot easier.
So Dash, you're obviously on the other side of the coin there when it comes to having one brand to push. You've been investing heavily in pushing it in front of the football. I've seen you advertised in a number of different places on the TV. What advantage does it give you?
I think I must admit it's interesting listening to Robert's answer there, because it's something I hadn't considered, around his Macklin Motors point. So I guess because we're just in England, and certainly that's where we intend to be. We've got no sort of plans, and I've been consistent on this as well for the 13, 14 years I've been CEO here. We see our our geographic footprint very much focused on England. Now, you can never say never, but certainly that's, you know, and I do get phone calls for opportunities, you know, in other parts of the UK, but, you know, certainly England, you know, is kind of where we want to be. But I think if we were ever to open Mac Marshalls in Scotland, then I certainly will consider, Robert's point, because it's something I hadn't considered. So I'm really glad that he shared.
The businesses are different, though. You know, we've got 23 Ford dealerships. We've got 14 Vauxhall dealerships. You know, we're big with PSA brands. Dash isn't. Dash's franchises are, in my words, more premium focused. So there is a difference. I couldn't run some of my finance offer-led marketing, for example, in premium franchise. It just wouldn't work. And I want to be able to do that. I mean, we're on the television, you know, pretty consecutively with our ITV and Channel 4 TV advertising with Bristol Street Motors and Macklin Motors, and it works for us. And I wouldn't be able to do that actually if I had premium dealerships in those brands. So I think the businesses are different. It's not actually the right question as to the difference between us and Dash, because they are fundamentally different businesses.
I'd like to touch, Robert, on the agency sales model. I'm going to move to Dash in a moment on this. Obviously, Volvo has come out with the news that they're going to change the way they do things by 2030. Everything's going to be sold online, and dealerships are going to become customer handover centres. What are your thoughts on the rest of the market, Robert? I mean, do you think this is going to affect your business severely over the next few years?
Well, you use the affect and severely. I mean, I'm with Dash, which is. I don't see a problem with agency as a model. I don't think all manufacturers will move to agency. I think you can actually get 80% of the benefits of agency from a business perspective as a manufacturer without actually going to agency. So I don't think it'll be a one size fits all at all. I think we'll have a number of different things. I can see some manufacturers, maybe smaller market shares, moving to distributorships and importerships more than having NSCs. The role of the NSC will be quite interesting. It all depends where the money is, doesn't it? I mean, no one's going to argue with handling fees as an agency model as long as the handling fee is sufficient to give you the right return on capital employed. So the model isn't really the main issue. The main issue is what's the economic flows of cash.
And Dash, same question to you. I mean, obviously you've been impacted by the announcement this week. You're the biggest Volvo retail franchise holder in the UK, aren't you? So I'm sure this is obviously something they've been chatting to you about long and hard. What are your thoughts around it?
We've all known agency is something that's potentially going to come, and there seems to be a lot of. You know, if you step back for a second, a lot of why this noise is on the sector is because there's a huge number of new entrants, because everyone's looking at online. You've got Kazoo, you've got Cinch, you've got Kazam, you've got, you know, changing habits because of COVID, and people are looking at this sector. It's, you know, it's one of the biggest sectors that underpins the economy. So people are looking at it and saying, well, what could happen there? But, you know, I've been in the industry 28 years, and I've been hearing this for 20 years, and I don't think I'm a dinosaur. I'm absolutely not, you know, sticking my head in the sand, hence why I'm making the moves that I'm to evolve my business and adapt to. So I think agency is something that's been around for at least 20 years, because, you know, a number of our partners introduced it for fleet back in 2001 from memory. So in fact, it's 20 years. So agency is around us already. It's nothing new. I think people are sort of a little scared of what it might be. Oh, is the manufacturer going to take our business away? But I don't believe that. And, you know, I was in a very fortunate position where I actually went to Germany last year and met with Håkan Samuel, who's the CEO of Volvo, with Christian Elverson. And we went and listened to what they were saying. So this is a move to agency. It's initially only C30. That's going to be, C40. That's going to be initially sold. But it will be transacted through and fulfilled through the retail businesses, and we will get an agency. Now, the dynamics of the business is going to be what's going to change. And I agree with Robert's points around what does the fundamentals look like for our business. Now, the reality is, if over time, and it's not going to happen overnight because different manufacturers will move at different paces. And also there is an interesting dynamic shift from a push model to the retailers to suddenly you're now a pull model. So how are manufacturers going to drive that volume, you know, and be in control? It's fundamentally different, which is why I know, you know, I talk to a lot of the CEOs of the brands, And one or two of them are anxious about, because suddenly the pressure is going to be not on the retailer, it's the pressures on what are you doing to get some more sales out there? You need to drop your prices because it's not moving. But fundamentally, the economics of our business have to be viable, or quite frankly, we're not going to have a business model. And I've always said, if you look at the long term, there is a symbiotic relationship between OEM and retailer. And guess what? The return on sales typically sits around 1%. When times are good, we require to do investments, we get paid less bonus. When times are challenging, like we've just seen with COVID, they come in, they help us out, they reduce targets, they give us free cash flow, So as long as fundamentally there is a requirement for that fulfillment service, which absolutely I believe there will be. If not, how is it going to be? How are test drives going to get done? How is servicing going to get done? How are those handovers going to get done? So I fundamentally believe there will be a requirement. It will just evolve as we've seen over 100 years. And we've got through a number of world wars, and we've got through Third World War with COVID. It's a resilient sector as we've seen. And I think big groups are very well placed to take advantage of that for the future.
Robert, you've mentioned a number of times about your plans for multi-franchising going forward. Why do you think this is a good thing for your business, and how's it going to change things going forward?
It's always been a feature, hasn't it? But you've got some fairly startling shifts in market share that's happened over the last 5 years, and will continue over the next 5. You've got manufacturers wanting to reduce distribution costs, and you look at some businesses which historically had a 10% market share, and they're sort of edging towards 5. And then you've got, maybe they've lost trade parts because of manufacturing organizations. And you come to the conclusion that there's not enough activity to sustain it. So we've got some very successful multi-franchised outlets. And it's quite clear that actually having more franchises in an outlet, assuming you've got the right management, of course, is going to be a feature. And we've got manufacturers that are looking at 3-car showrooms with digital, big digital screens. And my view is even some of the premium manufacturers will look at this, and as they rejig their networks, and you might have a very, very large brand center, but then there could be other spokes which could be multi-franchised. And I think in the next 5 years, we might surprise ourselves. I've always been slightly amazed, actually, about how multi-franchising wasn't a feature of the UK. And we had standards that stopped multi-franchising. But actually, you went abroad and they were multi-franchising as though it was, all in vogue, with some really lovely multi-franchise dealerships. So I think the economic reality will drive multi-franchising. And I think we'll see, the data will be interesting. I think we'll see a decline in the number of overall rooftops and dealerships. But actually, the number of outlets, I'm not overly convinced it's going to come down anywhere near the same, because I think we'll see new entrants. You've already seen how MG have come in with their, very, very good electric vehicles. There's another 120 outlets. So I think outlet numbers might not decline much at all. Rooftops will, but you'll have more in the rooftop. I mean, I'm not far from Morpeth here, which we bought in 2007 as a Ford dealership, 2.5 acres. And today it's got a very successful Honda business, still got a big Ford business, and got a Hyundai. And you add up the market shares, and that will work for us, and it will provide the throughput and secure that operation.
Yeah, interesting. You mentioned those premium brands there, and seeing them combining. Dash, can you see that with any of your premium brands getting together in one location?
No, I can't, to be honest with you. I mean, this is maybe the one point that maybe Robert and I slightly disagree on. I think I broadly agree with. I agree with the economics of what Robert's doing in terms of multi-franchising. I must be honest. When I joined the group, we had 42 businesses, or 42 franchises, I should say, of which probably 2/3 were dual franchised. And I've got to be honest, I hate dual franchising with a passion. I really, really hate it. My personal view, and it may be just the way that we operate, I don't know, or maybe just because I've got an aversion to it that I don't like it. But in my experience, you end up becoming jack of all trades, master of none. So, but I do accept Robert's point that if you've got smaller brands, the economics of sharing one rooftop makes absolute sense. And
especially in manufacturer groupings. So you look at what Stellantis are going to do. There is absolutely no question. In fact, we sold the business on Sunday. We sold Leicester Citroen because Robinson Day, owned by Stellantis, have built a multi-franchise site. And I think you will see more of that. Vauxhall, Citroen, Peugeot going together. I can see, some other manufacturer groupings doing exactly the same. Me and Dash do disagree on this, and we've had a number of conversations. I think there's a little bit of franchise mix in the difference. But I can see in the next 5 years some movement, even in some of the premium franchises. And actually, we've started to have some interesting conversations around that in smaller locations, actually, in fairness. So you've got your massive brand centers and then some more flexibility around that. And digital will pick up the difference, because these things will, you know, they won't be dusty places. They'll be very nice, small, but massive digital screens, so you can absolutely exhibit all the product range, I'm pretty sure. So, and we'll see, won't we? The proof will be in the eating. Me and Dash will be doing these calls in 10 years' time, and I shall remind him how he's wrong.
I think for me, Robert, where I slightly disagree as well, I think some of the smaller markets, you have to question whether there'll be a requirement for representation.
Yeah.
Could I see, you know, you sort of said there that you think there won't be a reduction in the number of retailers. I'm not sure I agree with that. I'll tell you the reason for why. Why is it that brands like Jaguar Land Rover, Mercedes-Benz, Audi, BMW have somewhere between 110 and 130 retailers, okay? But then you've got other volume brands who've got well over 250.
No, and there will be a reduction. There's no doubt about that. I'm just saying, if you follow outlet numbers, you might not quite see what's going on, because I think dealership numbers will decline bigger, actually. But the outlets will be in one dealership.
Yeah, my perspective is, one, I think there'll be less OEMs, notwithstanding your point about MG. Yeah. You know, I think there'll be less OEMs because some brands will not want to participate in emissions. So we've seen in recent years Infiniti, Mitsubishi, and I think there'll be more. I really do think there'll be more. I also think so that immediately takes a big number of the outlets out. I also think what you'll see is a situation where some brands who have got far too many retailers and have maybe not been fast enough to take action, and they desperately need to take that action, we'll see those numbers come down significantly. I don't see a premium brand saying, well, you've got a dealership in Morpeth representing Audi, and you're going to share it with Mercedes. I just don't see that ever happening. It's because, for me, you're buying into a brand experience. You know, that's what we do. We deliver our brand partners' values. You know, I just don't see that personally. You know.
Dash, the last couple of questions. Which other motor trade businesses do you admire apart from each other's, obviously?
Oh, I think there's some fantastic businesses out there. I mean, there's just so many. I think Arnold Clark, I think Eddie runs that. Phenomenal. What a machine. What an absolutely phenomenal machine. Sytner, I have huge respect for Darren and the team at Sytner. And they, you know, year in, year out, the culture that they have in that business is fantastic. The relationship they have with the brands and I think one of the things I would say, you know, one of the things for Robert and I is, to an extent, we possibly came a little late to the consolidation play. And what I mean by that is, you know, I was, Robert was at Vardy, I was at Inchcape. And in fact, that's when we first met. I seem to recall Robert at a Mercedes investor meeting. And I think what's interesting is, you know, a lot of consolidation was done post 2002 block exemption changes. So, you know, a lot of those deals that, you know, Trevor did at Pendragon, you know, Inchcape did. So, you know, some of those fantastic franchises in fantastic locations are already taken by some of that consolidation that was done prior to Robert and I becoming CEO in 2007, 2008. So I think for me, you know, you respect some of these businesses because they've got amazing infrastructures, because they've got the right brands, right market scale. So Sytner for me, Arnold Clark, you know, obviously Robert, huge amount of respect for. You know, there's loads. I mean, I've got a real soft spot for Inchcape because I had 7 fantastic years there. You know, as a global distributor, amazing. You know, I think what Pete Waddell does at Big is pretty impressive. You know, I could be here for hours talking about people I respect. So there's so many people I have a lot of time for in the industry. But they're ones that just come off straight off my head.
Robert, what about yourself? What other businesses do you admire?
I mean, it almost goes without saying, but there are 2 monster businesses, very, very professional, who make a lot of money, and that's Sytner and Arnold Clark. They're in a league of their own, actually. We are mere minnows compared to those 2 businesses. However, the other thing to say is there's some phenomenal businesses of all sizes. You know, if I want to know anything on certain franchises, I'll give Robin Luscombe a ring in Leeds. What a fantastic business, customer focused, exceptional volumes. I think the Swansway Group is a very, very nice, solid business. And you could go on. The listers I've got a lot of time for. I think the listers business is a very nice business, and you can just go on and on. The sector is full of great operators, and there's a good reason for that. It's hard, and if they weren't any good, they wouldn't be here now. You've got to be good to survive in this business. You know, on 1-2%. You know, financial crisis, COVID, Brexit, sterling issues. It's not an easy sector. And it's full of some wonderful people. And that's why people, when they get into this sector, tend not to leave, because we actually have fun with it. We have fun when we deal with competitors, and we have fun in our own businesses. And that's why people are in it. And that's why people don't leave. I don't think Daksh is going to go off and have an alternative career in something else. And I suspect I won't.
Robert, what's been the toughest part of these lockdowns for you?
Not agreeing with lockdowns. I think it's the toughest part of lockdowns. I fundamentally disagree with them, if I'm honest. I think the erosion of civil liberties, the erosion of the BBC as a propaganda machine for the government, I just don't like any of it. I don't like any of it. I am desperate to get back to some normality and the resumption of individual freedom, and it's broadly worrying.
Daksh, what about yourself? What's been the toughest part of these lockdowns for you?
I miss being with people. I miss being. It's quite funny. Just sort of in preparation for our results next Tuesday, the team and I got together in Milton Keynes a couple of weeks ago, and we hadn't seen each other for like 3 months or so. And I'll be honest with you, we got no work done. We would just, how's this? How we just larked around. To be perfectly honest with you, to the point where I said, right, well, I came to the office to do work. I'm going home to do some work. But it was nice. I miss seeing people, I really do. I miss the friendship, and it is a fantastic industry. It's you've got a lot of like-minded entrepreneurial people in the industry who, you miss things like the Ben Bull, you miss the AM Awards where you just catch up with car dealer awards. You miss all of that. The things that you look forward to, because I think for me, it's that whole social element is really quite nice about the industry, and it's not because you like going out. It's just people, isn't it? I think a lot of people are missing that. So there's going to be one hell of a big party, I suspect, in April when we're all out.
And finally, Daksh, would like to give you both the opportunity to ask each other some questions. It's quite a unique opportunity having you both on this panel. So thank you very much for joining us. But surely you must have some questions for Robert.
Well, to be honest, as Robert said, we do speak on a fairly regular basis. So we do.
I'd be very surprised if he had a question for me.
Let's have a think. I don't know. I don't, because Robert and I speak on a fairly regular basis, and I think a lot of people are probably quite surprised about that. We do speak. I think it's quite amusing because we find it quite funny when people sort of think that we're rivals or something. We actually get on incredibly well, and we do speak on a fairly regular basis. So if I had a question, I would have asked it to him.
What about yourself, Robert? Have you got one for Daksh?
What's your ideal weight, Daksh?
I'd like to, honestly. I'm 11 stone 8. I was really embarrassed, Robert. I got to 13 stone 6 on Boxing Day. I was so disappointed with myself because I've never been, I was hardly 12 anything, So I think Q4 really affected me in lockdown. Not in a bad way. Just I was sat in this office, and I'll be honest, I like a drink, not in an alcoholic kind of way, but it was too easy to open a bottle of wine, and Kenzie doesn't drink much, and so. It was too easy to say, well, what the hell, because I'd open it at 7 and I'd just go through till,
It is possibly the most worrying news I've had this year, that you've lost weight, started walking and given up drink. Because I always thought that was one of my competitive advantages over you.
Yeah, no, absolutely. So now, so I'd like to get down to, answer your question, Robert, I'd like to get to 11 stone. So that's what I'd really like to get to, but I'm well on my way.
Good. Well, it's great. It's great, isn't it?
I feel $1 million. So, Robert, you might be stuck with me till 65, I'm afraid.
Very good.
Well, thank you very much to both of you. I really, really appreciate you both giving up some time on a busy day to come on this Cardi Live. And I know it was a bit of a pain to pull together, but thank you very much.
Thanks, James. Well done. Thanks, Robert.
Nice to speak to you. Bye-bye.
Great stuff. Okay, if you'd like more Car Dealer Lives like this one, you can log on to cardealermagazine.co.uk and click on the live tab at the top of the page. Thanks ever so much for joining us. I'll see you next time.